Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis, updated commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'm going to interject my financial opinions as we go through it. And if you need help with anything, check out finding-value.com. That's where I dive deeper into all of these sectors, looking for potential investment opportunities. It's more of a longer term hold. I know I do these daily technical analysis updates where it's more of a short term outlook, as a lot of people on the YouTube channel, or I should say, suggested me to do this, which I'll do it. But my approach is a little bit more longer term, trying to find bottoming patterns, cost averaging into those bottoming patterns, and then riding it for the bull market. So that's kind of my approach, and I'm trying to identify the value versus price. And obviously, I do dip my feet into some of the more speculative stuff as well. Um, I guess you could say swinging for the fence, or um, trying to look for those opportunities that look really good technically that may not have the income or cash flows that a lot of the other companies do that I really look for and overweight. If you're interested in that type of investment style, you can sign up. Mayday coupon code. So you have to put in the coupon code Mayday, one word, Mayday, for a discount if you're interested. 50% off the first month. Just the first month is 50% off with that code, or you get a larger discount with the yearly membership if you want to go from a monthly to a yearly or sign up brand new into a yearly membership. Let's dive in. Let's take a look, see what's going on today. We start with the dollar, and the dollar looks really strong. We do have an impulse move. We're in the middle of it, moving higher here. Again, that's generally driven by yields moving on up. So this was a valid signal here, and that is your change. This is where I'd say that the market has shifted. Now, it's not obvious when you go through it. Some people get a little bit confused, as do I, because you just don't know if you're going to get follow through or not. But the marker was there in the pattern, which is this. This is a bullish piercing pattern. You can look it up. Then we have the smaller selling pressure move in it. So it took 2 days to fall inside the one, and now we are moving our way on up. So that's what we're looking for. But again, longer term, we've broken down and we're getting a return move up from that breakdown. This could move on up. Now there are chances that this rips and we go up if interest rates go up substantially. That is possible. But right now, the downtrend's broken. We are making a move higher, and that's not on the radar yet. We have to break through resistance as we get up there. Yields are moving on up. The 2-year yield's up 0.75%. It still looks good to try to work its way on up. We've broken to the downside. So the longer term is down, shorter term is trying to turn higher. So again, it's based off of time frames. The time frame I am using is this time frame. That's the long time frame. So when, like on the website and my investments and the way that I view this world, I'll just back out and let you guys kind of know. I view that we are going into an increasing interest rate environment. That's going to be a move higher in interest rates on the long term. On the medium term, we have broken down and we could easily hit lower interest rates due to the uninversion of the yield curve, potential recession, slowdown. All of those things are in the system, and that has broken this trend line to the downside. Then in the super short term, we are seeing some upward pressure where we could get a move that could come on up and then maybe reverse later on, wherever this move decides to reverse or whatever it looks like. That is 3 different outcomes based off time frames. I am bullish. I think rates are going to go higher in the long term. I think rates are going to go lower in the medium term. And I think rates are going to go higher in the short term. Totally different outcomes based off of different time frames. The 10-year is ripping. It ripped up today 1.37%. This is money, though. This is not clear. And what I mean by money is we're getting these signals in both directions, up and down. we've got an upward signal here, like we're going ready to go. And then we've got kind of like a consolidation thing going on. We also had pretty strong selling pressure on these two candlesticks here. It makes me think the way that this is trading and behaving, that something is going on with bonds. Like someone's in the background releasing bonds, buying bonds, doing things to try to potentially slow down moves in the market, or provide liquidity or whatever it is. I don't know what it is. Something in the background. We've seen really big moves in the reverse overnight repo. Things are going weird. That's kind of what's going on in the background. Looking at this, again, it's the same type of thing. We broke to the downside, and now we're kind of flinging all over the place on the right-hand side. The 30-year doing something very similar too. This still looks good to go lower on the longer term. Shorter term, we've gotten some moves higher. We could still maybe move a little bit higher out of this thing to do maybe a full retest, potentially. The reason I think it could go lower is the way that the candlesticks look. This is on the weekly candlesticks. We got a big surge lower. So we popped out of the pattern with this big candlestick. So that's like a big forceful boom that gets out of the pattern. Then if you notice, the green candlesticks are pretty small over here. And whenever you get this green kind of army, that's not an army, but a green 3-row candlestick inside of a big bearish engulfing candle, that almost always heads lower. And that's the pattern there. It's a continuation pattern lower. But that's on a weekly candlestick basis. We very well on the daily could go around a little bit higher before that turn goes on down. We could even come back to that level up here. So that's what I see on the 30-year. TYX, TNX ratio, we were up a little bit. Kind of we got this downward facing pattern. Maybe we can work our way on up. When this goes up, it's a tailwind behind gold. Usually what you want to see is you want to see this go up and rates go down. With the uninversion of the yield curve, that is the full force tailwind behind gold. Right now, it's just been creeping higher. It doesn't mean that we have to go higher. We could reinvert. It could do that. And that's where people would get really, really messed up, because most of the time in history, when you start to uninvert, it doesn't invert again. It's very, very rare for that to occur. I don't even know if it's ever happened. And you pair that with the unemployment rate, and again, the unemployment rate has been creeping on up. So, I wouldn't put it past governments and stuff like that to outright take some of these numbers and kind of try to manipulate the numbers. But there we are, just creeping on up. The inversion of the curve. Bond prices are pulling down. Obviously, when rates go up, bond prices go down. It's still holding in there. We're still above support, everything like that. There are some people that are speculating that this is going to go down and rates are going to go up dramatically because of the situation that our government is in. So we've got opposing forces here. We've got problems with fiscal spending. We are spending way too much, which then increases the debt that is issued of that country to finance it. And then we've got a potential slowdown that is pairing off with. So really tough market conditions here to nail it in the short term. Either way, I think we get inflation in the long term. That's my stance. The 2 and 10, we are down today, down 0.61. So the yield curve uninverted, but it did it with rates going up in a bear steepener is what they call it. So rates were going up on the long end, almost like the long end is pricing in a little bit more inflation. And then the short end, it went up, but it went up less. But the yield curve nonetheless uninverted. So with that type of situation, it didn't really help gold. Gold was down $10 an ounce. But this chart, to me, still looks fantastic. And why do I say that? If you look at the chart all through here, what you notice are large green candlesticks and smaller red candlesticks all through here. And then we still have kind of like this pattern, like a flag pattern, or maybe it's even like a megaphone pattern going on, and it's angled downward. That's generally a bullish formation where we could potentially head higher. We also have a big bullish engulfing candlestick and then a small selling pressure candlestick today. So that also still says that the upward movement is still game on. So I think gold looks really good. We just didn't get the favorable market conditions today. Silver, although we had crappy market conditions for these to go up in, silver still went up 1.13%. We also have this big green candlestick and all these small down days inside of it. That is screaming to me that it wants to go higher. It wants to rip. It just needs the right market conditions for this to rip under. But you got to keep in mind the government, I should say the Federal Reserve, I think, is playing with interest rates and trying to mess with things to try to hold this thing down. This thing's locked and ready. It's ready to go. I'm ready to see it fly. Fly, baby, fly. Platinum also ripping higher, 1.8%. We're still underneath that pesky resistance line. We'll get there. We'll get there, and we'll get through it. Give it time. Palladium up 2.6%, bouncing off support. There was your support level that I drew in eons ago. We've come on down, hit it, and we are coming back up. You could probably draw a trend line in here of a short term, and I don't really do this short term, but we could be breaking that trend line here any second. So GDX slightly lower, GDXJ slightly lower, and SILJ slightly higher. They're all very similar, and depending on what interest rates do, we could see some more sideways action because we've got a little bit more selling pressure through here, and we're just on support, so we could maybe do that, or maybe we could get a bounce off this support level. It depends what the market conditions are. It depends if rates go down and how the yield curve moves and all that stuff. But silver's sitting on top of support. It is looking like it's ready to launch, and that's the viewpoint that I would have, and I don't see any reason why SILJ would not follow that launch. XAU to gold ratio is outperforming the gold. So gold and silver mining companies outperforming gold itself. So we're up a little bit today. And again, we're coming from this ridiculously stupid cheap price. There isn't much selling pressure here. If we were going to rip lower, what I would start to see are these big candlesticks form to the downside. They'd be red boys. We're not seeing that. So to me, this looks like an entry point for a move higher for gold and silver mining companies. Crude oil up 1.66%. We are stuck between this resistance zone, which we just got some resistance there, and support. And again, crude oil is one of the major drivers of inflation into the consumer price index. It's in every government's, I'll say, interest to try to keep this thing down. And there are a wide array of opinions on where crude oil is going in the short term. I could easily see this be a continuation pattern where we could potentially break lower. I could see that we've got the dot plot versus inventory versus time. Our inventory levels and where they historically are about $10 or $12 undervalued. This should be more like $80 up here. But at $80, that would be a breakout. If it's a breakout and that's where inventory levels are heading, now you've got macro fundamentals fighting your sector fundamentals. And I'm just going to say this, guys. I don't know where this is going to go in the short term. Longer term, I think we're going up. And that deals with the debt problem that the United States is in. It deals with inflation, and this being a very inflation-sensitive asset. So gold, silver, and crude oil, I think, are all positioned well. Gold, silver being positioned better, but this could easily work its way on up or work its way on down, depending on the conditions that come here in the short term. TTF gas down just a little bit. Down 0.8%, get a little bit of resistance through here. So we're trying to break through that. You could see this loop around again. We've got natural gas in America up a little bit, 0.76%. We're still above that support level. There's the support level going across. So we could sit on there before heading higher. Our boy XOP, yeah, you know me, up 1.22%. We are sitting above that resistance line I drew in yesterday. We'll see if we can stay above it. And if we can get a move off of that support level. And then OIH also doing something very similar, up, but not a convincing candlestick. We lost some momentum throughout the day. That's why it's red. And we are still below a lot of these trend lines up here, these longer term trend lines here. So we want to get back above that. Newcastle coal futures down 0.77%, just moving sideways here. And again, I think we're going sideways to higher. We've got support underneath us. What you generally do is you get a sell off downward. You get less momentum, and then you start to work your way on up. Your buy points have generally been in this section here, and that's when you want to start to look at your individual companies. And there are a lot of coal companies, well, few coal companies that we've been buying that are up off their buy points here. Some of them are still down there in their buy points, and I think they are front running this move higher. We've got Sprott Physical Uranium Trust up 1.42%. So the buyers are stepping in. Still looks really good to continue higher, in my opinion. We squeezed into the corner here, this falling wedge. We got the big green army to show up with these big green candlesticks showing up. There's a little bit of a battle between the buyers and sellers there. We squeezed into the corner, broke out of it, and now we're starting to run. And what you want to do is you want to learn how can you buy this? What do you have to do? How could I buy it in this corner here and have the confidence to ride this thing up? What you could do is you can use multiple things here. You can look at the uranium futures pricing, and what I said before, this is a falling wedge, and they generally break to the upside. So the probabilities of success of breaking higher were there. And here we are breaking to the upside. There's your dead period, and that's generally where I purchase shares, is right in that area. I'm not saying to buy it in Sprott Physical Uranium Trust. I'm not saying to do anything. But that's the setup, the technical setup that I use even in individual companies. URA up 2.12%. That's also following the futures pricing. This is, in fact, a double bottom. And then we got a little bit of selling pressure here. That's all it could muster, guys. It couldn't muster it all the way back to the retest. And that's the way it goes sometimes. And that's what I'll say there. We've got URNM up 1.5%, very similar to URA, and URNJ up 2.7. Now this could get a little bit freaky here. We could get freaky here. We know global liquidity is going up, so we could get some really good opportunities in uranium. Now, what I would have done is I would have taken the chance and tried to buy it down here in those two areas there. That's what I would have done. And in certain companies that I watch. But I'm crazy because people would tell me that that's technically something that you shouldn't do, but I'm bullish long term. Short term, everyone got bearish and they changed their bearish and bullish outlook. I stay bullish. People call me a perma bull, but that's because I've been bullish since here. That's where I first got bullish, and I think we're going to go higher. This could go drastically higher with the market conditions that we've got behind us. So what I'm doing is I'm using the time frames, the bearish sentiment to accumulate in the dead zones of this for the longer term bullish nature in this market. We've got copper. Copper's continuing to go higher. It looks good. We've broken out from the downtrend, and it's working its way on up. Again, I'm long-term bullish on all this, guys. COPX up 1%, looking good. We've got iron ore down 0.23%. That's still bullish formation. Think of this little selling pressure as a flag pattern. This big stimulus jump higher is going to be good. And then if you look long term, this almost looks like a 1, 2, 3, 4, 5. That's a Livermore accumulation cylinder. This thing could go big. It could go big. The question is, what vehicles should I play this with? I've got steel companies that did 80 times, 80x, 50x, 80x, 100x last bull market. And they're down here, guys. They're down there. Aluminum up 1.89%. What do you think this is doing? It's starting to break out. It's getting close. We're getting close to a big breakout here in aluminum. Usually when you go sideways here, you're going to get a break. It's going to run. We've got nickel up 2.35%, looking better. And I talked about the double bottom potentially. So maybe look at some of those companies, and they are looking a little bit better, that are nickel companies. And if you look at the currencies too, it all starts to stack up, guys. Mu up 0.03%. That's just a little bloody nose on the weekly there. Let's see what the daily looks like. The daily, yeah, small little bloody nose. That's just a continuation pattern higher. Looks really good. We've got emerging markets up 1.97%. Here's the thing to notice. We are starting to move up in emerging markets and silver. A lot of these are moving up with the dollar moving up and interest rates moving up. We are going to eventually see, I think, gold and silver move up with interest rates eventually. And we might be there. I don't know. Maybe we're there right now. And emerging markets could also move up with that. So we could see a rotation out of the dollar, irrespective of what it's doing, to some degree. In the short intermediate terms, like let's say we've got a big pullback on the dollar overall, and then these relief moves up, the consolidation moves up and stuff like that. We could still see these start to rip to the upside as people gain confidence in emerging markets and they lose confidence in the dollar. KRE down just a little bit. We are right on that support level. We've got TAN down a little bit. It still looks okay to, I guess, go sideways. It's been going sideways for a long time, but it does look good, like it wants to move higher. Not much selling pressure here. We've got lithium up 2.92%. My lord, look at this, guys. Look at that. And there's still really good setups in lithium. If you want to join the website, I can share those opportunities with everyone. There is one opportunity that I'll buy in my retirement account that looks pretty good, pays a dividend too. RUMX also heading higher, 2.5%. So this is a double bottom. We've been working our way on up. It is crushing it. It is related to the stimulus in China, in my opinion. Baltic Dry Index down 2.5%. Still looks good to go higher. I don't see any reversal candlestick there. XHB down. It doesn't like the interest rates, but it's holding on. If we were in a bubble, just if we were in a bubble and interest rates are going up like that, this would go down if the housing market was soft. I mean, this would be crashing. It's not. Why is it not crashing when interest rates go up? All you bears, tell me why we're still up here with small red candlesticks like this is poised to continue higher. Tell me what you think. Russell 2000 just moving sideways, still in this pattern where we could potentially head higher, flag pattern. We've got the S&P 500 just moving sideways, not much selling pressure. I guess the plunge protection team is doing its job. The NASDAQ also just slowly drifting a little bit lower. It's up 0.08 today, but we've been drifting a little bit lower there. Still above support, that awesome straight trend line that I drew by hand. Let's put a more legit one in here, guys. Something like that. SMCI up 3.6%. That is a bullish engulfing, and we could see this start to work its way on up. We're getting support here. So if I draw a trend line through here, how do I know we're getting support? Wick at the bottom, wick at the bottom. We're getting these little buy candlesticks. A bullish engulfing shows up. This is acting as support here. We'll see if we can get any upside momentum here for SMCI. NVIDIA up 1.5%, still underneath resistance. We'll see if we can break through it. We've got Bitcoin down about 0.9%, heading a little bit lower. And we also have Ethereum down. Now, these are still in their patterns. I don't like seeing that type of elongation on the candlesticks. What we're looking at here is the size of the selling pressure. There's big selling pressure to move that amount that quickly. There's smaller selling pressure here, and then there's smaller selling pressure here as this contracts down and turns. We come on up, and this could be the first selling pressure move, and we'll see where this thing bottoms. But if this thing keeps falling down and we continue to get large selling pressure candlesticks like these guys, that's not a good thing. It's not a good thing. But that's where I'm going to end it. We'll end it there. Give me a thumb up for the content, guys. Subscribe to the channel. Subscribe to the website. We got the Mayday coupon code that's active, MAYDAY. We've got the midweek update that I released today. You can see that on the website and my opinions on the companies and the ones that I really like and the ones that I would purchase. And again, I don't make this stuff up. I put money behind my opinions. So I share my opinions and I invest accordingly, and you guys get it real time. So sometimes people get lower entry points than even myself. I like to consider myself a pretty good entry taker. There has been times where I just haven't gotten good entries. I mean, it does happen, but most of them are pretty good entries. Um, and you guys can come during the question and answer sessions and give me crap if I don't if I blow an entry point or something like that. But yeah, I can show you what I'm doing, how I'm doing it. It's a longer term approach. The past 5 years, not this year, but the past 5 years, my one of my accounts averaged 41% per annum. 41% per annum, and I'm not using anything ridiculous. I'm not using leverage. I'm not using options to do it. I'm just buying stocks, holding on to them, and really scrutinizing my entry points, and then having the ability to hold on, and ride things through. It does take some time. I'm not trying to maximize my per year return. That's not my goal. My goal is to make as much money as possible with the least amount of risk over this next bull market. And I want as much upside leverage as possible. And I do have other investments outside of my other investments like physical precious metals and stuff like that that I view as safer investments. So this is all kind of cherry on the top, swing for the fence type stuff. Not all of it, but some of it that I'm trying to do. But that's what I've got for today, guys. I'll catch you next time. This is Finding Value.